consumer internet. So these were two key sectors, and as a part of that, I ended up running a large program, and I ended up joining Visa for that for in financial services, which is probably the largest fintech program I've run till date. Also, it was re-architecting the authorization, clearing, and settlement systems of Visa. So Visa used to run on mainframes for a long time, and we had to re-architect that into more open systems. But first, we had to do a lot more business re-engineering before we did the tech changes. So accidentally, I got into excuse me, fintech in a bigger way, and I find it very amusing, having seen Visa and having seen what a big cash flow engine Visa and Mastercard happens to be an investor in all Quona funds. So having seen how big cash engines these are and the real product and tech, I'm really amazed by how we run zero MDR countries and large economies.
Yeah.
So I mean, it's amusing for in the short term and medium term, and these things are very dangerous for the economy in not so long term also. So we will see. The time will come. But every subsidy has to be funded somehow, and even this will get funded. We can talk about it if we have time.
No, I think they will allow charges once the entire payment systems are controlled by foreign forces. Only then they will allow, not allow before that. Make sure that every local company is dead before they allow any MDR.
Well, I think at this point we're all on a very circular path. I don't know who is killing whom. Global investors are pointing to local companies are pointing to global companies are pointing to regulators, and everybody is pointing to iSpirit. So anyway, let me not digress, because I can just go on that for 3 hours. But that aside, then I went to Harvard Business School, started a company called Travel Guru, which became the largest hotel consolidated travel payments company in India and Southeast Asia. We sold that to Travelocity Expedia. And since then, I've been in venture, started Asia, primarily South Asia, Southeast Asia practice for Greylock Partners. Then the financial crisis hit. And in 2008-9, I took a couple of months sabbatical to explore, to come back to Asia. And now the couple of months is now almost 13 years. So I'm here for good. And as a part of that, I think I discovered something I was very excited by, and I fell in love with. So was looking to kind of combine venture and entrepreneurship with something more on the development and masters and emerging underserved side. And I came across microfinance. I mean, lots of debates there. But summary is worked with a group called Unitas. So four of our portfolio companies go public. 8 of them became banks, so did very well, better than most of the portfolios I've seen in the Valley. And that's what really led to Quona, where the one missing piece we felt in this space is the evolution of tech and digital, whether it's product distribution, infrastructure, etc., was happening in a very significant way. And having seen microfinance, I realized they are basically in those business models were in dark ages. So we saw a big gap. Every country we operate in today, Philippines, Thailand, Indonesia, Vietnam, Brazil, Mexico, Colombia, South Africa, Nigeria, Egypt, you name it, Turkey, everywhere, there are more smartphones than bank accounts. So it's very, very fundamental now, where we realize that whether with the openness of data, cloud, analytics, learning models, digital distribution platforms, smartphones, of course, so on and so forth, the type of solutions needed for masses and underserved in our markets, emerging markets, will be quite different from what Visas and Masters and Goldmans and so on and so forth have done in US and European markets. And the second is, we thought over time, financial services will become a very integrated offering. It's not a transactional standalone solution. It will get integrated into multiple sectors, and which kind of leads to the topic of what we are discussing today, it's the embedded finance. And I think we have been around for now about 7-8 years. So first half of Quona was very classical fintech. The second 3-4 years have been very much in embedded finance now, whether it's hybrid models between financial services and commerce, mobility, food, agri, health, education, so on and so forth. So yeah, and along the way, number of the firms I just mentioned, the large Fortune 500 firms, etc., we were able to bring them on board as Quona investors as well, which has been a good testament of the fact that they're also trying to learn emerging market models. And yeah, I think we are on to now our third fund, typically invest in seed, series A, about 200 to 300 million per fund is the typical fund size.
Right.
And so maybe I can I can spend a few minutes on embedded finance and then pause. Anand, Shruti.
Yeah, perfect.
Okay. So let me maybe try to pull up this slide. I was trying to find some of this slides. Just give me a second. So I'll just show 3 slides because I was telling Shruti that I came back at like 8:30. I mean, I'm in Singapore, so it's yeah, my time 8:30, and I realized that number of these slides need approval. So I'm just going to show a couple of these slides, which I think I'm allowed to show.
Okay.
Can you guys see the slide?
Yeah. Ganesh,
Okay,
in short mode, we are recording, so just show only whatever you're comfortable showing.
Yeah. So this is fine. This is just a portfolio. So this is just to give people a quick snapshot of how it's distributed. That's all. I'll move on from this slide. Actually, there are some companies missing, but whatever. This is. Let me just move on to the. Actually, I was trying to show the embedded finance slide. I don't know why this one came up, but give me a sec. Yeah. So, can you guys see the slide?
Yeah.
So this is, I mean, very, this is just the basics. A lot of stuff probably people know. I think conceptually, we love financial services because we kind of talk about it as the oil that greases the economic engine across sectors. So conceptually, we always know that financial services have to be contextual. But I think only in recent times we have started seeing the digital infrastructure, tech platforms, exchange of data, openness to exchange of data, etc. And the kind of user stickiness in some of these digital platforms or recall factor where this contextual finance has been possible, right? So we have probably seen 2 different drivers of embedded finance. One is, of course, large non-financial digital companies, excuse me, which have built a strong use case or set of use cases to create stickiness with customers or with merchants, and how they are realizing that as a part of developing that relationship holistically and to beat competition, you need to maybe provide full stack solutions. And depending on the nature of companies, I think financial services usually one of the top 2 or 3 extensions or integrations they realize they need to provide. The the other aspect of this is you've also seen some financial services institutions which are very singularly focused or or single category or segment focused, also kind of expanding themselves sideways as they as they build more market credibility and stickiness. I think classic examples have been, we have seen HR SaaS companies evolve into employee benefits more holistically. We have seen insurance companies trying to expand into employee benefits more holistically, etc. I mean, some
Right.
have worked, some have not worked, which we can talk about. But generally, the openness of models to be more integrated and holistic, to become a more centralized platform for customers has become the driving factor of this theme. And in the midst of all this, we are starting to see some openness from banks or middleware players that are helping the banks and the large set of new age digital institutions use a common language to talk to each other. Again, some have succeeded, some are work in progress, some are complete failures. But net, I think the summary of all this is, I think we are at a point of no return, where overall we are going to see this trend accelerate in a pretty significant way. There will be successes and failures. I think we will see hypes and some real successes and some hypes. But net, I think on a secular basis, we are going to see this trend evolve. And some part, and for different sectors, the trend is at different stages, right? I think we have seen a lot more maturity in some sectors like SME digitization, or even to some extent in HR SaaS, whereas in some sectors it's still early, and mobility more because number of mobility guys have raised capital on the back of financial services. But in some sectors, it's still fairly nascent, like agri, still nascent, logistics, work in progress. It's not as nascent as agri, but it's not as mature as mobility and financial services. So I think we are at different stages of evolution in different sectors. But in general, we are seeing a pretty strong secular trend.
Ganesh, would you
In this
call
space.
even like a Udan or an off business also like embedded finance applications only eventually? Or I mean, would that like just be a byproduct or a
Yeah,
feature, as Kunal Shah calls it?
yeah. I'll okay. Uh, I think you could have done without the last statement, but that's okay. So, see, I think so I'll give you two different answers. One is because we are so embedded in the space, no pun intended, we don't look at it in a very technical way, frankly, because we as a fund, our mandate is sort of how digital is, it can drive broader inclusion for masses and underserved. So if you ask me, if the difference between, let's say, an Udan model and an ULA model in Indonesia, or something like that, is if Udan financial services a byproduct, and in ULA pay later could be a very pivotal product to help drive stickiness of merchants. I wouldn't mind either if it works. I mean,
Got
and
it.
this is more a practical answer from my side. But if you then go into the intellectual discussion of, is embedded finance a byproduct or core to your success, the way the way we look at it typically is, if you are if you are building a full stack solution, and I think part of the challenge of some companies is they're trying to build a horizontal and vertical full stack. What I mean by that is they have gone across verticals in terms of product categories, and they have gone across functions,
Yeah.
from pretty much from origination
Yeah.
to fulfillment. And I think therein lies the challenge. You keep raising more capital and you have to keep doing everything yourself, both horizontal and vertical, and that's a challenge. But that aside, in general, if you tell me that as the companies expand, if they have depth in certain verticals, and as they expand, if you start realizing that you need a more full stack solution to be able to build stickiness, to own the, to be the center of gravity of this of the customers, let's say, revenue generation function, or their relationship function with their customers. And I'm talking about B2B commerce largely now, or even bunch of the other players we are seeing in logistics and agri
Yeah.
and
Yeah.
healthcare.
Yeah.
I think then this is a very nuanced point here, to say whether it's byproduct or it's mainstream, but it becomes pretty integrated. And then, by the way, in the same model, I have seen companies, depending on the market forces. If you go to Brazil, a B2B commerce company might monetize financial services better because
Got
the
it.
inefficiencies are higher. But in India, even financial services companies don't monetize financial services as well as byproduct companies do in Brazil. So it's sometimes function of the market also, and the market forces, pricing power, all of that, right? So yeah, so we don't really, we resist from measuring in those ways, but look at the more holistic picture on the relevance of the solution in the overall offering. And if it drives your market power and stickiness and relationship, that's
Okay.
great.
Understood.
So I'll just end with this next slide. Let me see what it is, by the way. Okay. This is, I think, fine. So I'll just, this is just again, basically probably a little bit of an extension of what I have already said. There are a number of different models, but just to give folks a little bit more context on different dimensions we think on, these are probably examples of three different dimensions on which we could think of embedded finance solutions. As I mentioned, there are more evolving as we speak. This is also very, this was at a certain point in time when we did the last year's annual meeting with our investors. But B2B commerce and marketplaces are probably the most evolved models right now. And at Quona itself, we have now we had experience with IndiaMart, of course, before they went public. We had led the Series B, but then ULA in Indonesia, Capital in Egypt, and SocoWatch in Sub-Saharan Africa are probably the number one or number two players in each of their markets, and then facility in Brazil. So this space is certainly maturing, and in terms of perspective on models across emerging markets, we probably have a decent perspective on this space. Certainly, probably the most maturing of models. One space which is not mentioned here, of course, is the mobility, the convergence of mobility and financial services, and that's another space which is matured significantly. But at the same time, you have seen some really strong successes and some fantastic failures. Again, happy to talk about it down the line if you want to. And the second one is obvious. Again, I think broadly around food tech and ag tech, we are seeing a bunch of things, but this is very topical to the session we did probably, which is why it's mentioned. From a functional perspective, the third dimension we are seeing is the broader space of SME digitization. So we have portfolio companies which are companies we are looking at very actively evolving from HR SaaS into holistic benefits, from insurtech and insurance platforms to holistic benefits, SME digitization to providing, pivoting into financial services, some in a phased manner, some in a very holistic manner. Contabilize in Brazil, which is mentioned here, is a company that is the largest online tax and accounting platform for SMEs. But they're really now, and that is very Puritan data. The data they have access to is very Puritan data, and the company is now really evolved into providing a whole layer of financial services on top of that to these SME institutions, starting from bank accounts to be able to on top of the accounting tax solutions, open bank accounts, B2B payments, facilitating payments, one-to-many payments, many-to-one payments, so on and so forth. So we are starting to see this space is exciting because there's new stuff happening here. It's still early. I mean, there are lots of variants of this model, even in India itself, as all of you know. But yeah, these are some examples. Again, there are several others we are seeing, but some examples. And I'll stop sharing now.
Thank you so much.
You can ask me questions.
No, Ganesh, I don't. I may not get a chance. I think there are questions which people have here.
Okay.
You guys want to go ahead, Shruti?
Sure. Ganesh, maybe I'll start off with one basic question. So you spoke about a few specific sectors, like you mentioned 2, 3. Which are the sectors where you are very, you think there's a lot of opportunity here, and there are like specific tailwinds where you think in the next, say, few years, this is where we will see more applications of embedded finance? Any sectors that you have your eye on?
Yeah, that's a tough question for me, because I'm not usually smart enough to take a top-down view. My DNA is more bottoms up. Having said that, yes, there are a few areas where we think a lot more will get done. But whenever I say that, you also have to put that in the backdrop of how much has already been done in the space. Like mobility and financial services, a classical space, we are still seeing some interesting stuff evolve on the B2B side. Having said that, there is a lot of capital that's gone into it on the B2C side. There are all kinds of different models, and there is fair bit of noise and fight for dominance with significant capital, significant burn in number of cases. So the question is, what is the balance of opportunity versus the incumbent structure? And it's not about opportunity in isolation, but that is one space. I think generally more integrated logistic solutions is something I'm more bullish about. More integrated benefits, even though there has been lots of noise in that space in the last year and a half. I think there is definitely scope for someone to succeed. Frankly, a lot of people are talking about it. No one's really yet built built a more integrated solution. So those would be the ones which are top of mind, if you ask me.
Ganesh, adjunct to this, any sectors in India which you stayed out of consciously, like in the recent past, like, I don't want to do this because it doesn't fit. I don't think it's going anywhere.
Yeah, I told you. I think others should be the lesser Anand asks, the better. Because he'll keep asking me instigating questions. I mean, now it's old news, but we have stayed out of neobanks all through.
Yeah.
Even though we like the space, we have 6 neobanks. Well, six neobanks, which have now become 3 neobanks and 3 digibanks. 3 of them have got licenses in different markets, and we are evenly split between consumer and SME. But we have generally stayed away in India, and that's a space I still watch with a lot of caution, but now for a different reason. In 2019, I was in a different place of caution. Today, I'm in a different place of caution. At that point, I think we were seeing a lot of very we are seeing superficial concepts. We were seeing folks trying to take some very base solutions and trying to really and putting more effort on their pitch deck to show that I'm a new bank. And frankly, we did not see the depth of financial services. A more holistic solution thought. You might start with a single solution. You might start with an account. Single problem. You might start with an account, or you might start with B2B payments, right? Or you might start with the cash flow management workflow or whatever. But you need to see how they are building an integrated thought process. What is the relationship they are building with banks to start with, so on and so forth. The cards, expenses, accounts, credit, so on and so forth. We did not see that at all. Everybody we saw was far cry from anything we have seen in the markets we have backed. And the portfolio companies are kind of out there on the website. Where it's evolved to now is we have seen, I think, an evolution in 3 ways, right? There are a bunch of players who have failed already or gotten sort of merged because they have realized the limitation. 2, there are a number of, because there was so much noise in the space, there are players who got funded significantly, not on the bank of neobanking, now calling themselves or wanting to become neobanks. Or some claim they have become. I mean, again, I don't understand, but that's the claim. The third is we actually have neobanks which have raised significant, or neobank-like companies which have raised significant capital, but there is very little implementation today. There is very little understanding of customer stickiness. What is the use case? Why are you better than the banks who are launching their digital platforms, so on and so, or mobile banking platforms, so on and so forth. And the fourth is the regulator is trying to watch this more closely, and which is a challenge because our regulator does not like. And we have had now in India across the markets, personally and across Quona, we have seen 14 portfolio companies become banks, starting as financial institutions. So regulators do not like, especially the most stringent regulator is the Indian regulator. They don't like somebody calling themselves bank unless unless the regulator knows how to regulate them. So we have nice user experience companies, and half of them are with SBM. And again, I mean, you guys know who is with whom, but it's Equitas or IDFC or SBM. It's not your account. And calling yourselves a bank, and raising lots of capital, you're just asking for the regulator to, it's like literally putting a red sign in front of a bull and saying, please come hit me. So I think we are a little nervous till there is some regulatory clarity. There's a lot of pressure on the regulator because a lot of capital has gone in. So people are hoping, that we can push through with a bravado and see the regulators see light of the day that this is the future. But regulators like to be, or maybe this is a politically incorrect statement, so I won't say it here. But bravado doesn't push your way through regulators. You need to learn to be a lot nicer. And most people, both on investor and entrepreneur side, I think we just riding on our own perception of building a new world and not giving regulators their due, and that's not helping.
Right. And anyways, regulators is not like the number one problem anyways with the current crop. It's definitely a big risk of complete existential risk, but not the only problem. Even if regulator were to find out a way, it wouldn't mean much. So
yeah, I mean, no, I think
that was going to be my next question. Ganesh, when you look at say neobanks in other geographies and compare them to what we're seeing in India, apart from the regulatory aspects, what are the other things that we have still not seen in India? What are the other issues that you are seeing?
We haven't seen any company succeed, or I haven't seen any business model since 2019. People have started getting funded. Number of neobanks have more employees than customers. They haven't even rolled out products, and we have raised lots of capital. I mean, we have portfolio company called Banco Neon in Brazil, which is the third largest neobank in Brazil, and the fifth largest bank in Brazil owns a stake, and they have rolled out full suite of products: personal finance management, wealth management, consumer cards, savings and credit, checking accounts, credit for this kind of short-term loan, long-term loans, invoice financing. They acquired an SME neobank which had 1 million SMEs on it. So now they offer both consumer and SME services. The last round was led by General Atlantic. It was a 300 million round. It's a real company. They have triple-digit million revenue. We are in a different. I mean, I don't understand what frameworks we use or the world is using when we look at our companies who have barely launched, have nothing to show, and we just keep hypothesizing on what can happen. So we have a portfolio company called Coinworks, which was the largest SME lending platform, digital SME lending platform in Indonesia. They are one of the two fintechs. They're one of the three fintechs. Actually, we have two portfolio companies in Indonesia. Out of 3 licenses, 2 are to our portfolio companies. They both have banking license. They have launched payroll advance. They have launched a business card. They have launched expense card for employees on top of it. They provide a suite of wealth management products, debt, time deposit and time deposit products, term insurance products, invoice financing, supply chain financing, payroll processing. So it's like a bank plus kind of model, right? And sure, it's taken. Coinworks is started in 2017, so it's not like a company that's been around for 10 years. And Neon was started in 2017, yeah. So it's also 4 years old. And so I can give you examples, right? Like I said, we have 6. Actually, now we are investing in one more, which will be the 7th. But I think I fail to understand what our frame of reference is in India. What are we even talking about? I don't understand the product, the customer acquisition. We are all in a very competitive market. So customer acquisition costs are not low. And we have enough banks in this country. We have more banks than all the countries I operate in. I can tell you that. We are in 14 countries. No country has the depth of banking system that India has. So first, people have to get off their high horse and not call banks idiots, because most founders start with that premise. Right. So I think we just need to fundamentally become a little bit more reasonable in life. And also the last problem we have, last is kind of a facetious comment. It's not last, but one of the challenges we have is we kill every golden goose before it lays eggs. Before even the first neobank got started, suddenly 12 different founders got memos that neobank is the next hottest thing. So we had 0 companies at one point, and in a quarter we had 12, 13 companies. Everybody is getting funded, and we are all sort of competing with ourselves to launch and for resources and talent and capital. Whereas if you look at the other markets I'm talking about, you basically have 1, 2, or 3 companies, period. And all resources, talent, investors, partners, banks have aligned behind this 1, 2, or 3. Whereas in our market, it's very different. We are actually fragmenting our own resources and not letting any set of dominant leaders emerge. And this is not true for just neobanks. This across sectors we have this problem. So too many smart people and too many smart investors backing too many companies.
That's very interesting, Ganesh, because this backing of few winners that is followed even in US, even in the Silicon Valley, right? I mean, people stop at number 1, 2, and 3, say, "Yeah, okay, let me do something different." But here we have sort of by the dozens the same space, right? I mean, so in some spaces you have much deeper field compared to even Silicon Valley. I mean, we probably have more grocery startups than US
Yes,
today.
Of course. You know a lot better than me, of course. But yes, you're right.
I am just an outsider. So
No, it's a real problem, I think, because and I mean, this is a very I'm digressing now, and this is a longer discussion, and we have talked about this, Anand, right? That it's a country where it's an open country, anybody can come and invest. We are the only country in the world which has, Koreans, Japanese, Chinese, Russians, Eastern Europeans, Americans, everyone investing. Indians, of course, right? And now Southeast Asia funds are also coming in. So we are just open. There's more demand. There's more pool of capital. There are more high quality. There's more high quality talent and individuals. So we just have, I guess, sometimes too much going on in some sectors before it even settles down, right? And before the market is built, just the wrong competitive forces kick in. Like these neobanks, how many of these neobanks actually have a customer base of more than 10,000 today?
Yeah.
And we already we are in a competitive dynamic, which usually happens when an industry matures already.
Yeah. Okay, guys, questions?
Just digressing from neobanks to plain vanilla lending, old school. Like there, as you said, a lot of banks with a huge balance sheets in India. Then there is a pool of NBFCs, but still at the bottom, it's a capital-starved nation. As otherwise, these won't exist. But so there were some spaces like say gold lending, where say a rupee came. Okay, I have a layer where I use, rather than an NBFC, I use a bank balance sheet because at the end it's a high teens or a 20% kind of a lending. Do you see any such untapped spaces? Maybe MFI is one, but again, you don't have a asset backing, risky, where we can structurally, like these startup could use those pools of capital of low cost bank balance sheet, and basically fill that capital gap that exists just at least at the bottom of the pyramid, or those 20% plus yielding kind of spaces. Any such you think is still left to be served and is most like low hanging fruit?
There is no low hanging fruit anymore. All low hanging fruits are gone, and some, like I said, have been even destroyed because too many people came in and the market never took off. But having said that, I think where opportunities will emerge is, whenever we have a significant change, there is a discontinuous shift. When discontinuous shift happens, we will have a lot of unbundling and a lot of point products or point solutions or sub segments evolving on the back of the new technology. And again, I'm trying to say all of this without using the word digital assets or crypto, because then we'll spend rest of the time just talking about that. But when that happens, you'll see that unbundling, and as maturity sets in, there'll be few winners around whom probably the market will consolidate. As just general market theory, obviously it doesn't happen so smoothly, but we'll see successes, failures, unbundling and rebundling and all of that. So I think I can't say what could become a low hanging fruit in this framework, but generally, if you take the concept of secured lending, it has been extremely traditional and archaic. Now, and there is a portfolio company called Creditas in our portfolio, starts with C. You should look them up in Brazil. I mean, we invested at a 10 million valuation. The company now 6 years old is at 4 billion. They just closed a 350 million round, and they are I mean, it's public news. They are in the pre-IPO phase. They filed to go public and all that. They are the largest digital secured asset lender in Brazil today. Now, what they started with was the fact that there is a huge pain point in the market. It's the only market in the world, where majority of people who could take a loan, who qualified to take a loan, but still majority of people who own their home equity. Because the mortgage rates, I mean, take a wild guess, any of you, what the mortgage rates are in that country. It's 60 to 70%. Okay, so nobody can afford. It's like payday lending. Home mortgages are like payday lending. Right? So most people said it makes no sense. So the company came in and said, hey, I'll unlock your home equity. You want to send your kid to college, you want to buy a second-hand car, you want to furnish your home, you want to do solar paneling, you want to start a business, expand your business. Against the home equity, I will give you credit. And I mean, gold and home are the two things people value, hopefully, over most other assets. And from there, they expanded. So they started with that, then they expanded to auto equity, they expanded to solar paneling, which has become a big deal in Brazil, the whole renewable energy thing. So they've gone from one thing to another. They've acquired companies, they've scaled. But there was one starting point, but it's not a starting point. It's not at that point anymore. And the reason they were able to do that, the company has triple digit, over 100 million revenue, almost, one between 150 and 175 now. Core products are profitable and all that. But that gap was at a point in time, and they were able to really come in and start changing the whole architecture, saying we will build a digital tech stack and data stack. This is not just a unlock home equity company. This is actually a company where we need to build this customer data stack to start off figuring out which customer I want to offer what in future. So combination of data and tech and the founder's background and where Brazil was in that inefficiency let the company do this. So if you ask me what will happen in India, the combination of all these things plus the fact that hopefully in certain category, I'll throw you another wild card. In certain categories, I do think digital assets can become a security. So can you really build a secured lending model around digital assets in certain categories? Maybe. If you ask me today which those categories would be, I'm not sure, because there are 4 or 5 I'm looking at, but still very debatable. Because you need some real entrepreneurs to build the rails. And the challenge is the noise versus reality in the digital asset space is like take 1 step forward and 2 steps backward right now. But the combination of all this will create newer opportunities. So will it be pure play lending or will it be some kind of hybrid models? Again, hard to say. But will it solve the purpose? Will it unlock more efficiency and reach more people? Absolutely. But what will be the combination of forces? I am at a loss to say right now.
Understood.
Hey, hi Ganesh. Thanks for this. It's been really helpful. So, as I asked this, I realize it's quite context specific, but what are some of the things you've seen a lot of startups have done to embedded finance startups have done to build some level of defensibility? Because at the end of the day, a lot of it is the underlying financial products are still going to be the same, right? So, across geographies or across sectors, what are some of the things that you've mainly seen that startups have used well?
No, that's a good question. I think, yeah, you're right. It's very contextual to the offline ecosystem, online ecosystem, the geography, and all of that. But generally, I would say building very strong partnerships and relationships with the anchor institutions you are providing that solution to, I think is super critical. Most of the times what happens is large platforms are fishing and they will work with 4 different players or 5 different players. Excuse me, in India especially, they'll bid one against the other. It's not uncommon at all. So figuring out that relationship dynamic and what is the problem you are solving and can you really race ahead of others they are testing is important. Now, to be able to do that, I think we have seen that there are folks who can launch a payment processing solution as a point product. At the same time, there are folks who will launch a payment processing solution with the next level foundational stack where at least they probably understand how to do either clearing or auth or settlement or some combination. So there are 2 ways to launch the same thing. Again, there are lots of other examples, but I'm just the interest of time saying there are 2 ways to do the same thing. So the deeper your foundation is and you understand what is the area of strength you are coming from, the better. There are lots of guys trying to do embedded insurance right now. Very, very, very few companies understand. Like I sit on 3 insurtech company boards. It is by far one of the most complex areas I have experienced in my life, and I find it amazing that we have in some of the models or pitches I see. It's almost a consumer internet mindset to embedded insurance, and it's super dangerous because if you don't understand how to underwrite the risk, you will not know how to price it, and claims hits in a very discontinuous way. So again, if it's insurtech, it will be very different. I would want to see you will realize that over time, and not long term, medium term, when it's lending, when it's payment, when it's insurance, they all have risk in different ways. The ability to risk and underwrite and build systems to be able to have very strong moats around KYC and fraud. So it becomes very, 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 very critical not in the early stages, but as you scale. So if your question is where have you seen long-term success, there is no running away from these foundations, the and the relationship you build and the integration between between your anchor partners and what you are offering. And over time you have to expand, because again, some are building B2B, some are building B2B2C, some are building B2C. So if it's B2C or B2B2C, over time you have to figure out how you can become a more holistic provider than a point solution. A point solution will get you to the second base, right? And then now you have to figure out how to really hit a home run from there. So I mean, again, hard to give a generic answer, but I hope that gives some sense.
No, thanks, Ganesh. I mean, which is what we have seen about fintech in general and lending in particular, that the space is evolving, and you will have to keep evolving products. It's not like you figured out a good product, you've got a product market fit, and then you simply sell for the rest of your life. It's not like that, right? I mean, you have to keep evolving, keep adding. It will keep changing. The landscape will keep changing. Competitive dynamics will keep changing. Customer demands will keep changing. So a very dynamic space relatively, right? I mean, as compared to any other space, I would say. Right?
Yeah, no, that's very true, Anand. I think the 2 points, 1 point I'll add there. One is just underscoring what you're saying, but I'll add another point. The underscoring point is, I think in the frenzy of market pressure, need to project yourself, fundraise, all of that, I think a lot of companies are being forced to kind of ignore this point you just made.
Yeah.
It's not easy to do. And I think someone wise said something not very wise, which is every company will eventually become a fintech company. And I think that was a big undoing for the fintech sector itself, because if that was the case, I mean, lending is the oldest profession in the world. If every Tom, Dick and Harry can start doing lending and underwriting people and figuring out, we would be in a very different world today. So for thousands of years, people have been doing barter lending or capital based.
If it was that easy, then India would not be a great start country, right? I mean,
and with the vantage point we have across markets, I think there is starvation of capital everywhere in general. And there is a reason why it's there, right? It can be bridged, but it can never be fully satisfied, because then we'll be in a complete la-la land economy in terms of excess supply of capital and overflow of capital. But the second point I was going to make is, one of the key things, and there is no perfect answer, one generic perfect answer for everybody in my view. It's like everyone has to figure out what they want to do in life and what your philosophy of life is. It's somewhat like that. If your DNA is more on the commerce side, but you know what but you have very good understanding of your customers. Let's just take credit of customers' credit. Now you have three options. Either you say, one of the senior team members has a very strong understanding, we are going to build full stack from scratch. Or you say, I'm going to basically partner with a new age fintech institution where I know I am a lead gen, or maybe in some cases you can go beyond and they do the rest and they take the risk. Or third is, you might say, hey, I'll use somebody as vendor, I'll use the bank's balance sheet and I'll take the risk. Now you need to really figure out in life, what is your DNA? The problem is people are being told, whether by investors, whether by ecosystem, or themselves, think that, oh, somebody did this, so I can also do that. Not the case, right? Like everyone who was hostel mate or room, college mate of Sachin and Binny Bansal cannot start Flipkart. And we have to play to our strengths, not somebody else's strength. The problem is, every company now wants to do end-to-end lending. Maybe because you have put it in your pitch deck, or maybe because people are saying, hey, embedded finance, do it yourself. So you need to realize what's the right balance for you, right? And I think that point is being lost.
No, that's very, very right. In fact, even some of the recent pivots by some of the past fintech companies, they have been driven by what will the market fund, not by what our strength is and what can we do best, right? I mean, that's what is happening right now. And like you said, practically everybody who was sort of loitering around there has pivoted to neobanking, because everybody thought this is a new space to be in. So
No, so we have we have seen a few every year. There is a new trick pony, right? So
Yeah.
five for people who have been around for long enough. I think 5-6 years back, we started with consumer lending, then SME lending, then we went to payments. Every company was a payments company, So and then neobanks came. Now
Then
neobanks have
BNPL
become
came.
old school. Now BNPL, everybody's BNPL, So and so I mean, this flavor of the season. Companies are built over longer term, but flavor of the season changes all the time, right? So that is the hard part. How do you operate in the short, medium term while building for long term? Which is why this becomes a matter of, in my view, DNA and philosophy of life. It's not about money making or just doing something sensational in the moment, right? But we all get carried away. I mean, everybody is human being. We all get carried away in competitiveness.
Right. Okay, guys. Last 1 or 2 questions.
Hi, Ganesh. Raghav here from Bertelsmann. Just one question. An example of new age companies tying up with incumbents in the financial services. We're seeing that in insurance as well, where companies are taking existing products to startups and SMEs, and obviously acquiring customers and improving the claims process. So just wanted to understand, how do you differentiate the value proposition here from, let's say, what a neobank was doing for a bank, and what's really the key value add that would make them sticky for an incumbent?
Yeah, that's a good question, Raghav, because the answer is very nuanced. I think there is there's no single trick pony here, because each ecosystem and the revenue models and the openness of an incumbent insurer versus a bank versus NBFC could be quite different. Having said that, I'll give you one example. Like we have a portfolio company called Onsurity, which basically is the first rental license insurance model in India. I mean, we have 3 of the world's largest insurers as investors in us. I sit on multiple insurtech boards. We have been looking at a model that will own the full stack in the real sense for a long time in India, and license was the challenge. But they're very interestingly, without a full-fledged license, taken a rental license model, and they own the stack end to end. And they have built a relationship with 2 of the largest insurers in the country, where they're just lending their balance sheet like a financial institution for them to do this. And secondly, one of the 2 founders, being the youngest actuary in the country, he is very deep in pricing and risk and underwriting. So they're completely shifted the whole revenue model there. Now, I have seen the same insurers with regular distributors and brokers saying, okay, you do X GWP throughput, and they'll give you 5% or 6% margin.
But that's not
So
relevant. The point is that what they're taking.
Well, I think someone else is competing for airtime.
Sorry.
So I was saying you could go to the same incumbent platforms and end up with very different revenue models for very different business models. The question is, what are you giving to them and what do you want in return? So this is a very different model from any classical distributor in the country. Right? And by the way, you guys have, if you look other spaces also, that's starting to happen now, I think. But yeah, in the interest of time, I'll pause there. But generally, it's very, very, very specific to situation, and again comes from the place of the domain expertise of founders and how they can strike up a monetization model that makes sense for the large incumbent and gives them the degrees of freedom to run the business while monetizing. But not easy. I think it took us 3 years to finally find one company in India that we got really excited about in this space.
Got it. Thank you.
Okay.
Guys, any other questions? I have just one more, but anyone wants to? Cool. Maybe
Anyone but Anand. Anand, that's very tough question.
No, I'm not.
Go ahead, Shruti.
Ganesh, just your thoughts on marketplaces. So marketplaces and lending seems to go very well, but you spoke about how a company's DNA and what they're good at building. So if you look at it from that perspective, naturally you will require 2 completely different kind of skill sets to build this. How do you look at this going forward?
Yeah, no, good point. I think it's something we used to debate a lot till 24 months ago. I don't debate that so much now because, like I said, the end goal of what you want to be as a company has to be clear. And a part of the discovery process is what you want to build, buy, or partner with others for, right? And the challenge is being unclear and looking at someone next door and trying to say, okay, if they did it in-house, I'm also going to do in-house, because then take rates will go up and monetization will be better if I own the whole lending stack and all that. Now, if you don't have the DNA to own the lending stack, please don't own it, because eventually in the medium term itself, you will realize that it's not working out. So I think we have shifted now to saying, hey, I think it's fine for everyone to around the point of customer relationship and stickiness and the workflow of the transaction. There are multiple things you can do, whether it's in financial services or some integration of commerce and logistics and financial services, etc. It's just that we need to be very clear as founders and as the board, and board should do their job in helping. What is the company's DNA, and is it easier to build this in-house by getting right kind of talent, or it's complex enough as it evolves that we are better off partnering, knowing what we offer and what the partner has to offer. And and some people say, okay, let's start that way and then we can bring it in-house. So there is no perfect answer, but I think it's okay to think holistically, but be careful what you want to do yourself and what you want to join hands for. Or in some cases, people are buying now. Like we have our portfolio companies in this space which have scaled up in their markets and become, like I said, the leading players. Now acquiring smaller plays in particular functions for talent and to fill that gap.
Super. Thank you so much, Ganesh.
All right.
It was a pleasure.
Thank you.
Always.
Thank you.
Thanks, Ganesh.
Thank you so much.
Thank you.
Great
Thanks,
fun.
Anand. Thanks, Shruti. Thanks, Sahil. Thank you, everyone.
We are going to go through the recording and pick out things.
Okay. Okay. Sounds good.
Yeah. Sounds good. Thank you so much.
Thank
Bye-bye.
you. Thanks, guys.
Bye.
Good night.
Bye.
Bye.
Good night.